Did greedy grocery stores cause the inflation, or was it Jerome's money printers? Corporate profits are down almost $400 billion from their all-time high last year, but they're still roughly $200 billion above the pre-pandemic trend. These past 2 years, politicians have been scapegoating those profits for inflation. Elizabeth Warren, for example, singled out grocery stores, famously the lowest margin business on earth. Still, it is worth asking, are corporate profits causing inflation? In short, no. In fact, it's the opposite. Inflation causes the profits for three reasons. Number one, too much money chasing too few goods, especially during the lockdowns. Number two, how accounting rules handle inflation. Number three, uncertainty, cutting back on investment. Taking each, start with the big one, the money printers. The world's major central banks printed roughly $9 trillion to finance lockdowns, even as those same lockdowns were reducing the amount of stuff for sale. Supply chains were choked and services were literally closed. So you had too much money chasing way too few goods, meaning more dollars per remaining good. Basically, in the kingdom of too much money and not enough production, the one-eyed factory is king. Next up is accounting. A lot of inventory or investments were made years ago, meaning they cost the old price. So your haberdashery bought hats for $9 last year. Normally you would sell them for $10, you'd make a buck. But if all prices went up 10%, now your hats cost $10, you have to sell them for $11. You're now healthier as a business, you're still only making a buck, but you have a one-time accounting profit because the old inventory was cheap. It's a quirk, an accounting quirk, not some nefarious shift of the economy towards big hat. Now, this may sound obvious, but earlier this year, the Kansas City Fed put out a paper on the statistical correlation between inflation rates and markups. Markup is the difference between the price you charge and what it costs you. These Ph.Ds, either because they don't know any better or because they want to keep working at the Fed, came to the hilarious conclusion that the markups caused the inflation. As in, businesses spontaneously got greedy, the trillions in money printing was a coincidence. So they concluded that since markups rose 3.4%, inflation was 5.8%, quote, markups could account for more than half of 2021 inflation. Remember, the purpose of the Fed is to hide the inflation it causes. It's like joining a cult where you have to pretend that gravity doesn't exist and come up with increasingly bizarre explanations why things fall down. Final part, number three, is uncertainty. If a recession is on the horizon or, say, a lockdown of half the economy, businesses pause investing because they are trying to survive. They don't replace machines. They may not even maintain them. They don't invest in advertising. This cuts their costs in the moment, which raises their profits in the moment, but of course it sacrifices future growth. In fact, early in COVID, investment plunged by 22%, and it's currently crawling along at about 7% lower than the historical average. That difference goes straight to accounting profits, but again, it's not making the business healthier. So put it together, and rising corporate profits these past 3 years have been a result of, not a cause of, money printing, with an assist from one-offs, accounting quirks, and fear of the future. So what's next? With both inflation and impending recession, it would not be shocking if profits rise into the storm, giving a false sense of security to markets before falling off a cliff. As always, nobody will have seen it coming. Okay, we'll be watching. See you next time.